Hey fellow traders, in this video I want to talk quickly about the relative strength rating, the number, which I've made an arrow here on MarketSurge. Let me try to do this in 5 minutes or less. My name's Joe. I am a professional stock trader with almost 30 years, 29 years of trading experience, and I've been a MarketSurge member since the late 90s when it was called daily graphs. So there are two relative strength. Okay, let me backpedal. One of the characteristics of a winning stock is that it shows strength versus the average stock. Its performance is stronger than most stocks in the market. And MarketSurge gives us two different ways to track this. One is with the relative strength line, which shows in line form the behavior of the stock compared to a particular index. The index, the default index is the S&P 500. Although if your stock is a NASDAQ stock, for example, or a Russell stock, you can change it. You go to this wrench here and you go to relative strength line. You can tinker with it right there. Now, I made a pretty in-depth video on the relative strength line, so I'm not going to talk about it any further. I will put a description of that video. I'll put a link of that video. I'll put a link to that video in the description. Wow, I should probably edit that out, but guess what? I'm not going to. It's a pain in the neck. Now, let's talk about the relative strength number. And if you don't have MarketSurge, I'm sure you can find this out on Grok or ChatGPT. Type in what is the relative strength rating of Intel right now for MarketSurge, and it'll tell you. It's kind of a backdoor workaround. So this is the percentage that the stock is outperforming all of the other stocks in the MarketSurge universe, which is about 10,000 stocks. It's like 9,000 something. And so two-time U.S. investment champion Mark Minervini says that for beginners and probably for intermediates too, you want to only buy stocks that are outperforming at least 88% of the stocks. That is, that have a relative strength rating of 88 or higher. Intel here is at 95, so we are sitting pretty. And I would say if you are a beginner, that is, if you've only been trading for 1 year or less, or if you've been trading for many years but you just haven't figured it out yet, and you are, an unprofitable trader, then yeah, stick with that rule, 88% or higher. That'll put you in some really strong stocks. That's a good way to go. When you get more advanced, I'd say when you're in an intermediate, I would make a big caveat. That is, stay in stocks above 88 or higher, or stocks that are just breaking out of new bases. If you take a look, let me show you 3 examples here. Here is Gilead Sciences. Relative strength is 77. So that would, according to Minervini, that would completely, we wouldn't look at this one at all. But if you look at why, it's because it's making a huge multi-month base. The longer the base, the farther into space. This is really constructive price action. And we see some tightening, some VCP action, right? This is a stock broke out, pull back in, that if it launches now, this is a stock we want to get in, even though the relative strength is below 88. In this case, it's reporting earnings in 4 days, so we probably want to wait for that earnings pivot. And if we look at the monthly, look at that huge base. Here's our saucer. Here's our handle. That's absolutely something we want to be buying on a breakout, in my opinion, not investment advice. Let me show you 2 more. Here's Nectar, 99. But I suspect right here, which would have been a perfect buy point, I suspect that the relative strength rating was under 88 at that time. INVX, same thing. Relative strength is only 83, but look, the relative strength line is making new highs, and it's breaking out of this huge base. Volume is still a little weak. If we see this maybe make a little bit of a cap, and then push to the upside, in my opinion, that is very buyable, even though that relative strength line is lagging. So yeah, there's your 5-minute tutorial on relative strength rating. If you're a beginner, stick with stocks that are 88 or higher. And by the way, you can, any list that you make, whether it's a hand-picked list, this is my focus list for next week, hand-picked list, an industry list, a list you've picked off of one of the pre-lists, off of pre-selected lists, pre-selected screens, off of MarketSmith. You can sort these by relative strength right here. And then, like I said, if you're a beginner, maybe you only do these top ones here. If you are a little bit more advanced, then you can open up the floodgates. And if the relative strength number is lower, if the stock's trending down, then obviously don't buy it unless you're shorting it. But if it's in a base and about to break out, then that's a stock we probably want to be in. Let's look at Microsoft here. Prior uptrend, VCP base. Probably we're going to look for it to break out on earnings. And if it does, that would be buyable, even though a relative strength rating is below 88. That's my thoughts on the relative strength rating number. Let me know your comments or questions. Hey, I have a Patreon. My members and I post trading ideas and charts and strategies on Patreon every day. There's a 7-day free trial. You can check that out. There's a link in the description and in the comments section. And also check out my partner, Seeking Alpha Premium, my go-to source for what? Fundamental information. You can read news articles and all sorts of analysis. There's a link to that in the description as well. I'll see you guys in the next video.